Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 5 of October 2024. Tata Trust is undergoing restructuring to streamline expenses by eliminating CFO and COO roles, reducing external consultants, and focusing on core philanthropic missions. The move aims to cut administrative costs following an internal audit and financial review, emphasizing efficient governance and resource allocation. Joining Flipkart and Reliance Industries, salt to software conglomerate Tata Group is set to enter the ever-growing quick commerce sector as customer demand rages in metros. Tata's e-commerce venture New will enter the fast delivery segment branded as New Flash. It will be rolled out to select users offering grocery, electronics and fashion. Maharashtra is in active conversation with industry stakeholders to formulate a dedicated global capability center policy to stay competitive in the race to attract investments from the fast-growing sector. This comes close in the heels of Karnataka, which unveiled the country's first dedicated state GCC policy with the intention to attract as many as 500 new centers and create 350,000 jobs by 2029. With the Finance Ministry seeking justification for continuing the Interest Equalization Scheme or IES scheme for exporters, the Commerce Department is exploring ways to revamp it to ensure the scheme meets the objectives outlined during its launch 9 years ago. These schemes is currently set to expire on December 31st. IES is an interest subvention initiative under which banks offer reduced interest rates to exporters on their pre- and post-shipment rupee export credits. Lenders are then compensated by the government. Ireland-based aircraft leasing firms, long favoured by Indian Airlines, face scrutiny from India's tax department for possibly exploiting tax treaties. India questions these firms' tax benefits, suspecting they are set up in Ireland to avoid taxes. The issue coincides with Gift City's promotional efforts for setting up aircraft leasing businesses in Gujarat. Indian law firms are expanding internationally, setting up offices in key global hubs like Singapore and Dubai. This move, driven by increasing cross-border deals and international arbitration, is aimed at supporting multinational companies entering India. Firms like Cyril Amarchand Mangaldas and Khaitan & Co. are leading this trend, establishing strategic partnerships across Europe and Africa to tap into new markets and uphold international standards. SEBI has decided to allow a non-individual investment advisor or IA to obtain an annual compliance certificate from an auditor confirming compliance with client-level segregation. Regulation 22 of SEBI IA Regulations 2013 specifies that a non-individual IA must have client-level segregation at the group level for investment advisory and distribution services. This is a step towards ease of doing business and in terms of recommendations of working groups for a review of compliance requirements for IAs. Indian food delivery platform Swiggy Limited is seeking to sell shares for as much as 390 rupees each in an initial public offering that may raise $1.35 billion. The IPO will open for bids from November 6th and the shares are expected to start trading from November 13th. The government is likely to offer some concessions in import quotas to electronic hardware manufacturing companies that can step up domestic production under the Production-Linked Incentive Scheme for Information Technology Hardware. In a meeting with stakeholders last week, government officials asked all companies to provide concrete production plans for the next fiscal year for products such as laptops, tablets, all-in-one personal computers, ultra-small form factor computers and servers. Uttar Pradesh has become India's third largest state by active companies, surpassing West Bengal with 1,45,000 operational entities. The state has seen significant growth in company incorporations due to strong economic performance, ease of doing business, and a large customer base contributing to greater investor confidence. Indian lenders such as Kotak Mahindra Bank, IndusInd Bank, IDFC First Bank, and RBL Bank foresee ongoing asset quality issues in the microfinance sector for several more quarters. Over-leveraging and rural economic slowdown are cited as major reasons, leading to increased provisions and cautious disbursement strategies. Elon Musk's artificial intelligence startup XAI is seeking new funding at a roughly $40 billion valuation just months after a separate financing for the startup brought in $6 billion. The company's valuation was $24 billion in the last funding round in May, meaning the latest deal would represent a substantial increase, vaulting it into the ranks of most valuable startups in the US. Mukesh Ambani's Reliance is venturing into quick commerce with a 10 to 30-minute delivery target. Leveraging its vast supermarket network, Reliance plans to challenge players like Swiggy and Zepto. The move aims to adapt to changing shopping trends and bolster its business ahead of an IPO. The service is already available in select cities and will expand further. As per the Finance Act 2023, the taxpayers shall not be allowed to file the GST returns after the expiry of a period of 3 years from the due date of furnishing the said return. The said changes are going to be implemented in the GST portal from early next year. Hence, the taxpayers are advised to reconcile the records and file the GST returns as soon as possible, if not filed till now. Top public and private sector banks have lined up to take a bite of a rare greenfield project finance loan by Adani Enterprises as lead lender State Bank of India looks to sell down a large chunk of the rupees 20,000 crore credit line it had sanctioned earlier this year for the conglomerate's petrochemicals debut. Bank of Baroda, Punjab National Bank, Union Bank of India, Central Bank of India, ICICI Bank, and Axis Bank have either committed or in the process of committing funds to the $4 billion polyvinyl chloride or PVC project at Mundra in Gujarat. India's HDB Financial Services, the non-banking lending unit of HDFC Bank, has filed for an initial public offering of up to rupees 12,500 crore or $1.49 billion, in line with its parent's announcement earlier this month. HDFC Bank, which holds a 94.6% stake in the lender, will sell shares worth up to rupees 10,000 crore, while HDB Financial will issue shares worth rupees 2,500 crore according to draft papers filed late on Wednesday. Aditya Birla Asset Reconstruction Company, a joint venture between Aditya Birla Capital and Vande Partners, is winding down its India operations, marking the latest in a series of fund-backed ARCs exiting the country. The move follows recent exits by Arceon Revitalization, a JV between Apollo Global and ICICI Bank and Lone Star India, underscoring the increasing challenges in India's ARC sector as non-performing loans hit a 12-year low. This decline is largely credited to India's 2016 Insolvency and Bankruptcy Code and the rise of the government-backed National Asset Reconstruction Company. The RBI has issued updated directions for central counterparties or CCPs. Under these guidelines, an authorized CCP is now permitted to appoint an independent director in accordance with Section 150 of the Companies Act 2013. Further, the responsibilities of the Nomination and Remuneration Committee have been outlined, requiring the NRC to identify individuals qualified to serve as directors or be appointed to senior management roles following the specified criteria. OpenAI has enhanced its ChatGPT AI chatbot with real-time search engine capabilities, allowing users to get fast, up-to-date answers with links to relevant sources. This upgrade challenges Google's web search dominance and integrates the feature for paying subscribers, later extending to free users. The European Commission approved a joint venture between Reliance Industries, Walt Disney, and BTS Investment. This will create India's largest media conglomerate, valued at $8.5 billion. The merger will include over 100 TV channels and two streaming platforms. Reliance will hold a controlling stake, and the merger is expected to be finalized in early November. In a significant update for taxpayers, the Central Board of Direct Taxes, through the Directorate of Income Tax Systems, issued notification number 5/2024 on October 30th, 2024, mandating the electronic submission of certain forms listed in Appendix 2 of the Income Tax Rules 1962. Under the revised rule, all specified forms must now be filed electronically, which aligns with CBDT's broader initiative to modernize and simplify tax procedures. The update is expected to enhance the ease of filing, reduce paperwork, and support timely processing by income tax authorities. The Central Board of Direct Taxes has recently issued Circular Number 14/2024 on October 30th, 2024, which allows for the condonation of delay in filing income tax returns for assessment year 23-24, specifically for entities claiming deductions under Section 80P of the Income Tax Act 1961. This circular provides relief to cooperative societies and eligible entities who, due to various reasons, were unable to file their returns within the prescribed timeline. Homegrown FMCG company Dabur on Wednesday announced that it will acquire Sesa Care, maker of Ayurvedic personal care and wellness products, at an enterprise value of Rs 315 to Rs 325 crore. It has entered into an agreement to acquire the majority 51% stake from private equity fund True North for Rs 12 crore at face value. The enterprise value is estimated to be in the range of 315 to Rs 325 crore, including debt of Rs 289 crore, which will be backed by the corporate guarantee of Dabur. Banks have slowed down credit card issuances due to increasing defaults among customers. The Reserve Bank of India reported a significant decline in new card additions from August to September. Experts warn that this cautious approach may continue as lenders are wary of rising delinquencies and new regulatory measures affecting unsecured loans. India is adopting a cautious stance on implementing the OECD-led Pillar 2 tax regime, which mandates a 15% minimum corporate tax rate for multinational enterprises with global revenues exceeding 750 million euros. Though the government may soon include an enabling provision in the Income Tax Act as part of a broader legislative revamp, full implementation could be delayed due to minimal projected revenue gains. Saudi Arabia is reviving plans of investing in grassroots Indian refiners after Indian state-run refiners began evaluating proposals to reduce the share of expensive Saudi grades sourced under term contracts and substitute them with cheaper Russian oil. The move by Saudis to consider investments in new Indian refiners, proposed by both Bharat Petroleum and Hindustan Petroleum, is to ensure a captive market for their crude oil and regain dwindling market share in India after their proposed investments in Ratnagiri Refinery and Reliance Industries soared. The government has tightened the wastage allowance that exporters of gold, silver, and platinum jewelry can claim at the manufacturing stage to qualify for duty-free import of raw materials. The revised norms, effective from January 1st, will reduce permissible wastage across various jewelry categories, distinguishing for the first time between handmade and machine-made pieces. Exported goods must match the weight of imported duty-free metals minus the permissible wastage to ensure that excess metal does not enter the local market. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.